On inflation, walk us through the numbers and explain why it seems to be getting harder to cause inflation to come down after so much inflation seemingly has been wrung out.
So what you often see with inflation is it looks like a perfect mountain when you kind of track it. And what happens is the steeper that rise, the steeper the decline. But that last mile is always the hardest. That's very typical in most cycles. And what typically causes that last mile is an economic slowdown. The only time that really kind of hasn't happened is more like the 1950s. And so that's where we are right now, where we are not necessarily getting the economic slowdown, and we're just finding it hard to grind out that last percent. And I think, Chair Powell is in this really tricky position where he has kind of committed himself to rate cuts this year. And you can tell that they really want to be able to do that. But they want to be also very mindful of where we are in inflation and trying to wring out that last percent, which is pretty meaningful.
Your answer, not implicitly, but suggests that you are suspicious or suspect of the Fed being able to engineer the so-called soft landing. Do you think that something harder with more unemployment is likely?
I think it's hard to say whether it's likely or not, but I think investors need to be really honest about how hard what the Fed is trying to do right now is. And the tools that they have are very blunt instruments. And so I think it's really hard to be able to predict whether it's actually going to work, but I think it bears repeating how difficult it is to do.
Julie, there's a couple of names you think are not so flashy, but kind of doing well quietly. Ollie's Bargain Outlets is one of them. You can sort of think about the consumer interest there. And Cadent.
Yes. So, I think when we're thinking about small caps, people have been shunning them, and I think for good reason. Earnings really hasn't returned for small cap. They've been very negatively impacted by inflation, but there are still lots of great small cap businesses. They're not flashy. They're not sexy. Ollie's is one that does off-price discount, closeout merchandise, which for a value-starved consumer, which is true at the high end, the low end, the mid end, they shop at Ollie's, and I think they find the value that has been really missing from a lot of retail. And Cadent is so unique in that it has these very niche positions where it has a number one position, and it's able to kind of consistently execute with high profitability. So those are the types of businesses that we're drawn to.
Do you like small caps at this point in the market cycle as a group better than you like large caps? And if so, why?
I don't think I like them as a group. I think you really, as a, as a small cap investor, I think I actually get paid to say no more than I get paid to say yes. And the reason why is if you look at the small cap index over time, it's actually degraded in quality, both from, the financial metrics, partly to the profitability, also the level of leverage. And so it's really important to be very selective. That said, I'm finding that on a relative basis, the valuations in small caps are much more attractive than they are in large cap. And so I think they're part of every balanced portfolio diet.
I think of small caps in that sense, kind of like my 18-year-old son. He hears no a lot more than he hears yes. Julie Biel, thank you. Appreciate it.
Thank you.